Hello and welcome to another Wade Gordon signals tutorial. Now we have an understanding of what binary options are, let's discuss how they work. Binary options work by correctly predicting that at a chosen future point in time, known as the expiry time, the market price of an asset will either be higher or lower than the market price of the asset at which you open the trade, which is called the strike rate. If we believe the price of the asset will be higher than the strike rate at the chosen expiry time, we place what is known as a call option. And if we believe the price of the asset will be lower than the strike rate at the chosen expiry time, we place what is known as a put option. These are the terms used in binary options trading. So, at the expiry time, if your prediction is correct, then you'll receive your stake, which is the amount you've invested on the trade, plus a fixed percentage of the stake, which is your profit made, back into your binary options trading account. Typical profit payouts per successful trade ranges anywhere between 69 to 90% of the staked amount, depending on the asset traded and the platform you are trading on. If your prediction is incorrect, then you lose only the amount staked on the trade. That's it, no more. Fixed risk, fixed returns, hence why it is called binary, 0 or 1, because there are generally only two outcomes at the expiry time. You either win or you lose. One point to note, very rarely this happens, but if at the expiry time the market price of the asset is the same as the strike rate, then you simply receive your staked amount back into your trading account. This is known as a tie. What's important to understand here is that when we are trading binary options, we are never physically buying or selling any asset. We are just speculating or predicting where the market price of the asset will be at a future point in time, like a bet. However, we do not gamble when trading binary options. We treat trading binary options like a well-managed business, using select professional trading strategies and correct risk management. And because we are not taking ownership of any asset, trading binary options does offer several advantages compared to other forms of trading. Specifically, the profits you make through your binary options trading are generally exempt from capital gains tax and dealing commissions, which is great because that means more money in your pocket. Here are some examples in order to illustrate the call and put choices when trading binary options. Firstly, an example of placing a call option. Say at 1300 GMT, we are looking at Euro-US dollars, one of the most traded currency pairs in the world, and the current exchange rate is 1.50000. Given some positive economic data released from the Eurozone, we believe in 30 minutes' time the price of Euro-US dollar will be higher than 1.50000. i.e., the euro will strengthen against the US dollar. We therefore place a call option at 1.50000, our strike rate, set our expiry time for 1330 GMT with $200 invested on the trade. The platform is giving us a payout of 85% if we're successful on the trade. If at 1330 GMT the price of Euro-US dollar is 1.50001 or above, then our trade has finished in the money, and what would be returned to our trading account is $370, the original $200 invested plus $170 profit. If the price of Euro-US dollar at the expiry time 1330 GMT is 1.499999 or below, then we lose the $200 invested on the trade as the trade has finished out of the money. If the price of Euro-US dollar at the expiry time 1330 GMT is the same as the strike rate 1.50000, then the $200 invested on the trade is simply returned back to our binary options trading account. Now let's cover a put option example. Say at 1500 GMT, economic data has been released from the United States and it's come out worse than forecast. Given the negative data, we believe the US dollar will weaken and the exchange rate US dollar Japanese yen will be lower than the current market price 125.670 in 60 minutes time. We therefore decide to place a put option at 125.670, our strike rate, set our expiry time for 600 GMT with $300 invested on the trade. The platform is giving us a payout of 82% if we're successful on the trade. If at 1600 GMT the price of US dollar Japanese yen is 125.669 or below, then the trade has finished in the money, and what would be returned to our trading account is $546, the original $300 invested, plus $246 profit. If the price of US dollar Japanese yen at the expiry time 1600 GMT is 125.671 or above, then we lose the $300 invested on the trade. The trade has finished, out of the money. If the price of US dollar Japanese yen at the expiry time 1600 GMT is the same as the strike rate, 125.670, then the $300 invested on the trade is returned back to our binary options trading account. And that's it, pretty straightforward. This concludes the tutorial. In the next video, we'll go into detail about assets groups we can trade using binary options. We look forward to seeing you then.